was fired by the company that I was working for, unless I understood the way that markets worked, I would be vulnerable to this happening again. And I bought something like 6 Bitcoin to turn this 100,000 into 1.4 million. I thought I was a king and I lost it all. I understood that rule number one is protect your capital. At the end of the day, I didn't make any money because... All right, what is up, guys? Welcome to episode 3 of Money, Markets, and Mayhem. So today for episode 3, what we're going to do is we're going to slow things down a little bit. We're not going to be looking at charts. We're not going to be digging into meaty concepts like options and leaps and Tesla insurance and things like that. We're going to slow things down, and I'm going to tell you guys a little bit about my story, why I got into macro, when I got into macro, what I did before getting into macro. And, you know, I'm going to touch on, like, this game is so broad. There's so many different things that you can play with in financial markets. There's so many different asset classes, but there's also so many different strategies and styles of strategy to make money, right? You don't have to just be one-dimensional. You can adopt multiple different strategies. And the best traders in the world, eventually, through their evolution and their learning, they adapt multiple different strategies. So they'll have, you know, long-only accounts, or they'll have long-short accounts, or they'll have options accounts, or they'll trade macro rather than just stocks. There is many, many ways that you can approach financial markets with the intention of building wealth for your future self. So what I'm going to do today is I'm going to talk about a little bit about my story and what are some of those things that, or some of the possible avenues that you can take in this game. I'm also, just at the start, going to quickly touch on episode 1 and episode 2, and I'm just going to give a little bit of an update on where we are based on the topics that we spoke about in episode 1 and episode 2. So yeah, I'll kick it off with that, and then I'll get into my story. And you know, I received some feedback during the week. People have sent me some emails, people have left me some comments, and people are leaving me messages on Instagram, and all of that feedback is appreciated. The general consensus is that I'm giving it a crack and I'm having a red hot go, but there are areas that I can definitely improve in order to make this content more digestible and more entertaining for you guys to tune in and watch each and every week, right? Like the last thing that I want is tuning into this to be a chore. I want it to be something that you guys look forward to. So please, whether it be by email, whether it be by Instagram or comments on the video below, please let me know how I can improve and what are the things that you would like to hear me talk about in future episodes. So first of all, just touching on episode 1. So on episode 1, we were speaking about Bitcoin, why I thought Bitcoin was important, why it matters, why it really matters now, and why it's really coming into its own, and why I decided to go all in with my dad's stack of cash at that time. So for those of you who watched episode 1, you'll remember that we were looking at Bitcoin and it was hovering around about that 82 to 83,000 mark. And if you haven't watched episode 1 and you want to go back and see what we discussed, go back, hit the link just here. I'll pop up the link in the corner and you can go back and you can have a look at that one. So in episode 1, I think the main theme was why I thought that Bitcoin was approaching a bottom. And at the time, the market wasn't sure, right? There were 50% of people were saying we're going to go back and retest lows, and the other 50% of the people, or at that time it was probably less, it was probably like 10, 20% of people were saying, I think we've put in a bottom and we're going to start to spring off this base. But basically we were looking at Bitcoin and it was in that indecision stage at about, I think the recent low was around about 74,000. At the time we were trading at between 82 and 83,000. And there was a bunch of signals in that video that I saw, both in the charts and fundamentally with what was happening in macro, that made me decide to go all in at that time. Now, as we sit back here today, with hindsight, we can see that Bitcoin is now trading around about 95,000. So that call, that time, paid off. And those calls, you know, this game is not about predicting, but it's about being able to make money or protect money no matter which way the market goes. So at that time, I think we got it right. And if you want to go back and check out what those signals and cues were, so that next time we might be in that situation, you don't miss that bottom, please go back and watch episode 1. With relation to episode 2, we spoke about Tesla and a strategy that I basically adopted where I'd sold my underlying stock and with a small amount of capital replaced that exposure to the underlying stock using call options, leaps. And I bought leaps, without going into detail, basically the leaps that I bought last Friday, since then are now up 100%. So basically on my cash invested, that trade is now up 100%. And any of the money that I would have made if the Tesla stock was going up, I've still maintained that upside and haven't missed out on it. So that was another really cool strategy. And I know I've had some feedback, and a couple of you have said, dude, like the options was just way over my head. Can you break things down a little bit more? But if you are at that level and you want to go back and check episode 2 where we discussed options in that trade, go and have a look at that, because that trade's going well. And I'll keep you guys updated each episode on how those trades are progressing and when I decide to close them out, etc. So anyway, enough talking about the markets for a minute. I'm going to tell you guys a little bit more about my story, why I got started in this game, when I got started in this game, and how I think is a great way to approach it if you're watching it and you're just early on in your journey and getting started. So basically my previous career was selling land. I sold land for Australia's largest property developers from about 24 years old. So that was back in 2007. And I think I got into the market at a really good time because that was around about the time of the GFC. And then the home buyers grants came out and the market really took off. And since then, house and land market, the land price is probably 3x'd in that time. And, being someone who was interested in entrepreneurship, from an early age, I wasn't just selling the land, I was also investing in the land. And I was buying blocks in all of the estates that I was developing in. So that was kind of like a really well-paying apprenticeship, so to speak. And then I met my partner Dom through the industry, actually, back in 2014. And I think we started dating around 2017, 2018. We were friends first. And the reason I was drawn to Dom is because I had always wanted to create a life that allowed me to travel the world. And the way that I was approaching that was trying to build assets, trying to build a career, and then being able to, through having some wealth and some capital, being able to have the freedom to go out there and build that life. Whereas Dom was the type of person that would just travel on her last dollar. And it didn't matter, like she was always up for an adventure. And I was just so drawn to that energy. And over time, I've come closer to her way of doing things and she's come closer to my way of doing things. And I feel like we've met in this happy middle. But the reason that I tell that story is because one day after we were home after work, and I said to Dom, look, we really need to start an online business because, this kind of working from one place in the universe or being fixed to this one place where you grew up or close to your work, this is not for me. I want to be able to adventure and I want to be able to travel the world. And I'll never forget Dom's comment at the time. She said to me, what do we do? Do we start an Instagram page? And I'm like, I don't know, but we have to work it out. Anyway, one thing led to another. I found Adam Hudson, who I'm now doing the Unemployable podcast with, and the boys, and I found Adam Hudson's Reliable Education course. We started an e-commerce business at the back end of 2018, I think it was, or started 2018, and we went live, sold our first product in 2019. So from 2018 to 2019, we were working on getting this e-commerce business up and running. And the estate that I'd started working at in 2014, it was about roughly a 2,000 lot estate, was coming towards the end. At the end of 2019, we only had about 10 or 20 blocks left. And as a salesperson, if I don't have any blocks left, it's time to move on. It's time to get into another land estate. Otherwise, you can't make any income because all your income is based on commission. So at the end of 2019, begrudgingly, I didn't want to leave the company I was at the time. It was Satellite Property Group. I put my feelers out there while still trying to get the e-com business up and running with Dom. She'd left work a year earlier to work on it full time. I went out there looking for another land estate to sell land at. And at the end of 2019, I found one out in the southeast of Melbourne, and it was another awesome estate. It was only about a quarter way through, and I was able to negotiate a really cool deal. And I loved the guys that I was going to be working with. Awesome. So in 2019, they'd come off a tough year, and they were struggling to do, I think they were doing like 5 or 10 land sales a month. And so they were really looking for a change as well. They were looking for someone to kind of spark some life into the project. So I started in Jan, and in the first 3 months, Jan to March, I think I did about 100 sales. So on average around about 30, 35 sales a month. And they were wrapped. Things were flying. And I'm like, you know what? The e-commerce business is going all right, but I've got this job. Everything's good. But it was starting to still pull at me at the time. I'm like, you know, all I've really done is kind of replaced that, like these golden handcuffs kind of keep getting tighter. But you know what? Like, let's keep building the income so we can keep building the e-commerce business. And then in March 2020, the pandemic hits. And up until that time, I had built a reputation in the industry as a professional land sales guy. I'd sold nearly 3,000 blocks. And you know, I'd started doing like social media, and I had my own like Facebook profile, and a lot of land guys, like the real estate agents, started doing it at the time, but a lot of land guys hadn't started doing it. So I was, you know, you could say I was like ahead of the game, and I thought I was an asset to any business. COVID hits, and the company that I'm working for panics, like everyone did at the time, and decides to fire a bunch of staff. And as a salesperson, you always think that as long as you're making sales, that you're indispensable to your team. But I learned in March 2020 that I wasn't. And so I was fired by the company that I was working for. Last in, first out. And I'd never been fired before. The whole world was going into lockdown. Superannuations were plunging. Share markets were crashing. And I just remember feeling this shame and feeling this panic. Like, wow, I thought that I was safe in this gig. I thought that I was great at this gig. I thought that this is the thing that I would be doing for a long time. And I realized at that point, unless I understood the way that markets worked, the way that capital flowed through the world, unless I really cemented myself as the person in control of my own destiny, that I would be vulnerable to this happening again at some stage in my life. And at that point, Dom and I were talking about having kids, and that was just something that I couldn't handle, the thought that even though I thought I was so great at something, that it was so easy for the company that I was working for to fire me. And I'm sure that there's a bunch of people who either don't like the job that they're in or love the job that they're in and think that there's no way that the company that they're with would ever get rid of them. But it's always a possibility. We don't know what the world is going to hold. And so I remember going home with this shame and explaining to Dom, like these guys just fired me. I don't know what to do. And at that time, the e-com business, like we didn't, like no one could go to stores. No, we didn't know what that meant. We were panicked because we thought, is this going to crash our e-com business as well? Over the next couple of months, we learned that the pandemic was actually going to be the greatest thing ever for the e-com business, because everybody started shopping at home and everybody started buying products for their home because they were stuck at home. And luckily we were selling a home bedding product. So the e-commerce business started to build up, and that was great. But I couldn't stop watching macro videos. I couldn't stop watching videos about tech companies. I couldn't stop watching. At the time, I think I subscribed, or I started watching videos by Real Vision, and I was watching them on YouTube at the time. And basically what Real Vision, their mission is to democratize the information of macro and finance. So what they would basically do is get some of the best macro minds in the world. They would sit them down in a studio and they would interview them based on the trades they were doing now, how they were positioned. And you had experts that spoke about gold. You had experts that spoke about the stock market, people that spoke about tech, people that spoke about technicals. And I just remember like watching these on YouTube, and the ones that were coming out on YouTube were actually delayed because you had to subscribe to Real Vision platform to get them live. And I just remember just spending so much time, like every little bit of spare time that I had, I wanted to watch videos on macro. And obviously during COVID, everyone was at home. They had a lot of time in their hands. And so you start trading, right? Like everyone else. And so I'm watching these macro videos and I'm starting to trade and I'm starting to try and put into action some of the things that I'm learning from these technical speakers, and I'm trying to invest in some of the things that these gold people are speaking about. Anyway, to cut a long story short, over that time of about like from 2019 and mid 2020, I just got chopped up. Like I just got chopped up trading. I think I was self-managing my super, and I think I lost about 50 grand. I think I lost another 50 grand just like trying to trade in and out of different asset classes. And I'm like, what am I doing? I am spending like, it was probably at least 50%, but sometimes up to 60, 70% of my week just listening to these videos, reading these reports, trying to follow the markets and just understand the flow of things and the way things are working while I had been fired from my job and while I was trying to build the e-commerce business up. And I remember having a chat to Dom and just saying like, Dom, like I'm not getting a return on investment on all this time spent. Should I stop doing it? Should I stop spending time, watching all these videos and doing all this research and doing all this learning? And she was unsure. She's like, I don't know. And something about stopping just didn't feel right. There was something about that content that just drew me in, and I just wanted to know more. I wanted to speak about it every day. I was in group chats with people who traded. I was in group chats with ex-financial planners and people who, follow the markets. And every day I was just chatting about it and wanting to learn about it. And so that's how I started. And as I started to watch more videos, things started to kind of piece together. And what I found is when you first start, you think that everything is disconnected. So you think that a video on Bitcoin is just about Bitcoin. You think a video on gold is just about gold. You think a video on the stock market is just about stocks. Video on bonds is about bonds. And you think, okay, these are all like individual and of their own, of themselves. But after time, you start to see the same trends and the same things that affect the price of Bitcoin, or that affect the price of gold, or that affect the price of the S&P 500 or stocks. You start to realize that the same things that affect the price of those things are all the same thing. That the thing that is affecting price is all the same thing. And what I found those things to be was liquidity. And when I say liquidity, I don't mean like, does a market have buyers and sellers? When I say liquidity, I mean, are the balance sheets of the major parties involved in this market, are they liquid, and do they have cash available and balance sheet capacity? So the Federal Reserve, does it have cash and capacity available? The big corporations in America, do they have cash and capacity available? The Japan Central Bank, the ECB Central Bank, the shadow lending banks, are they in a position where they've got capital available and they're ready to spend? Or are they in a tight for capital and not able to lend and spend? And in March 2020, we saw the pinnacle of everyone getting squeezed and being tight all at the same time because of what was happening in markets. Liquidity came out of markets and everything crashed in unison. And you basically were really able to see how liquidity and then the next thing is the macro seasons, which I'll touch on in a minute, affects everything, and how everything is driven by the flow of those funds. And then the other thing that you've got is what season are we in? What economic season are we in? Are we in a growth environment, or are we in a deceleration environment? Are we in an inflationary environment, or are we in a deflationary environment? These are the combination of these two levers, growth and inflation, determine what season we're in. So macro winter is when we're in a deflation environment, inflation's coming down, and when growth is coming down. That's what you consider macro winter. Macro summer, which is the opposite, is when inflation is going up and growth is going up. So in March of 2020, we were in macro winter. Growth was coming down rapidly, and inflation was coming down rapidly because of the COVID pandemic, and that affected all of property prices. And then the other two are autumn and spring. And spring is when growth is rising, but inflation is flat or going down. That's great. We want to be in spring or we want to be in summer. They're the best two. And then autumn is when growth is decelerating and inflation is going up. So at the moment, for example, there's fears that we're about to move into a winter because of all this stuff that's happening with the trade wars, where inflation is going to come down and growth is going to come down, and that could lead to all assets selling off. So I basically realized that these things, the economic season that we're in, liquidity, and there's one more thing that really impacts the price of all of these assets, and that's government policy. Because what you saw during COVID is that governments and central banks came in with all this stimulus, and what happened? We saw a massive V-shaped recovery. So even though everything was locked down, the market just bounced rapidly off the bottom, because I think the one thing that's most important to the prices of assets is government policy. And when I say government policy or policy just P with a P, that includes either government policy or monetary policy, and fiscal policy or monetary policy. And in future episodes, I'll break down the difference between fiscal policy and monetary policy. But I don't want to go into it now because I don't want this episode to run too long. So what happened? So what really got me hooked? Well, the thing that really got me hooked was after I'd lost a bunch of money, I'd been chopped around, I was trying to get my e-commerce business going. I was able to kind of work out this link between the macro season, liquidity, and policy. And liquidity is driven by corporates, but it's also the most influential people on driving liquidity are governments and central banks. And I basically had seen that all this liquidity was coming into the market. Bitcoin had crashed from like 12,000 down to 6,000, and it had started to recover with this liquidity, and so did tech. And I watched a video at the time, and I recommend everybody go back and watch it if they can find it. It's from someone called Raoul Pal. I think I'll post the link to it, or I'll post the thumbnail to it. And it was something along the lines of, this is your lifeboat and Bitcoin is your lifeboat. I watched that video, and the way that he spent 90 minutes tying up how we got here from 1998 currency crisis to 2008 financial crisis to money printing to tech stocks going up to governments debasing currency in order to try and inflate the debt away. He tied the whole picture together and basically said when Bitcoin was about 10 to 12,000, guys, Bitcoin is your life raft, because similar to what I said in my first episode about Bitcoin, it is the antidote to all this mess and all this flow of capital and this whole global financial system. All of macro is Bitcoin. Bitcoin is macro, because Bitcoin is the baby. It is the child of this macro situation that we are in. He painted the picture. He put it all together. And at that time I got my super. My super had gone down like 20%, and I self-managed it. I basically got half of my super and I put it into Bitcoin. And I think at the time, it was something like, Bitcoin was something like $12,000 a Bitcoin, and I bought something like 6 Bitcoin. And over that time, I watched Bitcoin rise. And when you're invested, whether it's 1 Bitcoin, half a Bitcoin, 10% of a Bitcoin, when you're invested, your level of curiosity and your level of interest goes up. Some of the best traders in the world, one of the traders I admire most is Stanley Druckenmiller. And he basically says, leap first, research second. So if you have a hunch on a position or on a strategy or on oil or gold or Bitcoin or something, you've read something, you've listened to something, it appeals to you, you have a hunch, make that first little investment. Don't bet the farm. Put maybe 10% of what you've got to play with, make that investment. Once you're invested, then you'll do the research that's required to really understanding that thing and knowing exactly what you're investing in. And that's basically what I did with Bitcoin. I put my, I think it was $100,000 Aussie at the time, so whatever it was, $100,000 Aussie at the time. I bought my 6 Bitcoin, and that was a lot. That was heaps for me at the time. Wasn't everything, but it was a lot. And that got me on the journey. That got me hooked into the journey. And, Bitcoin went up to 60,000 from there. And at the end of the day, I didn't make any money because As you do in this game, you decide that once Bitcoin's gone up, you want to chase more. And so I sold my Bitcoin and I bought ETH at 1,000, and then ETH went to 3,000. And so I'd made more money. And so then I sold my ETH at 3,000 and I bought Luna at $30. And then Luna went to 124. And here I am thinking I was a king. I'd turned this 100,000 or this 200,000, whatever I had in my super, I'd turned it into 1.4 million. I thought I was a king. And then the Luna crash came and I lost it all. And most people at that point would walk away, but I couldn't walk away. I had to keep learning and I had to keep getting back into it. And so I want to say, for the people out there that have had losses and for some reason it's like watching a car crash. You can't, it's horrible, but you can't turn your head. You have to keep watching. If that's you, if you've had some losses, but you can't pull away and you're just still so curious and so addicted or so attracted to this game of macro investing, then that is a sign that you should not give up and that you just need to basically take the next evolution from knowing enough to be dangerous to now knowing what's required, not just to be right, but what's required to make money in whether you're right or whether you're wrong. The next evolution is learning things like assets. The next evolution is learning all the different tools that experienced traders use that we'll touch on in these episodes to work out ways or to structure ways where you can protect your capital. Rule number one is that you always protect your capital. As long as you can protect your capital, you keep living to fight another day so you can compound your capital. So if that's you, if you've had some losses and you're still hooked and you just want to get into this game more and learn more and read more, then this is where I suggest that you need to start looking at the next level. If you're just starting out and you're not sure where to start, or if you don't like the sounds of losing money or protecting your portfolio or trading in and out, and you just kind of want a passive set and forget type thing, then you probably need to take another approach. Rather than learn the technicals and the fundamentals of trading in and out or protecting your capital through things like options, you probably need to understand over the long term, what are the things that I can invest in and what are the ways that I can structure my portfolio and continue allocating to my portfolio that are going to protect me no matter the economic season. And so I won't go into detail with it today, but basically the hint or the clue is to look into either fund managers or look into strategies where you can protect your wealth no matter the economic season that we're going into. Now, at the moment, with everything that's happening, all the uncertainty in the world, that's becoming a little bit harder than what it once was. The hint that I will give you, though, with relation to those things would be to look into gold and look into Bitcoin, because I do think they're related to being able to protect your wealth long term. Tech stocks, good tech stocks and industrial stocks that manufacture something or produce something are also something that I think are worth looking into the future. You know, that's energy stocks, industrial stocks, metals and mining stocks. They're worth learning about and looking into, because I think we're moving into an era where hard assets and productive assets are going to be important. And that's a little bit different to the era that we've been in since 2008, where non-profitable companies have been given the runway to grow and have been given the runway to go long periods of times without earning any money, just because they're building businesses or they're building networks. There might not be as much leeway moving forward for unprofitable, unproductive companies. So you might not just be able to invest in the S&P and win. You might have to make sure that you're invested in productive companies, because if we get higher inflation over the next 10 years and interest rates rise, as I think they will, then what you're going to see is a lot of volatility. So the S&P might move back and forth, up and down for the next 10 years, but be flat. And if it's flat over 10 years, it means in real terms, you lose. So we're moving into an environment where you need to try and protect your money against inflation, against debasement, and in real terms. And so the clue there would be look into things like gold, look into things like Bitcoin, look into things like hard assets and real hard money. There's a school of thought out there that money is a medium exchange. Money is what we transact with. But The famous banker from JP Morgan once said, gold is money and everything else is credit, or an IOU. So again, I've mentioned the book Broken Money. I would go back and I would read that book, Broken Money, and I would spend some time asking yourself, talking to ChatGPT, talking to friends, asking me a question in the comments, asking me a question on Instagram, working out what type of investor do you want to be. Do you want to be a passive investor, someone who can put surplus spending money or surplus income into investments to try and grow a nest egg? Do you want to be a trader? Do you want to be someone who does this full time? So like me, that you can work from anywhere in the world, and you love the thrill and the back and forth and the in and out of trading and making, 100% gains in a week if possible? Or do you want to be someone in between? Do you want to be someone who slowly gets to that point? Do you want to be someone who just focuses on investing in companies? Are you good? Do you have an accountant's background? Do you have a statistical background where you can look at companies that are undervalued versus other companies? That's something else you can do. The game that I'm playing is, and what I've noticed out there is that a lot of macro guys don't really have the courage. So the macro gurus out there that can see the world from 20,000 feet, they don't really have the courage to trade short term. And a lot of their strategies are medium long term. And then I see a lot of the short term traders out there, they don't really have the courage to invest big sums of capital with conviction for a long term bet that might be 5 years, where there's a chance they could draw down or lose 70% of their capital if they were to sell, or where there's a chance that their portfolio could drop 70% if they didn't sell. And so both ends of the spectrum, the long-term guys don't like doing the short-term stuff, and the short-term guys don't like doing the long-term stuff. And that's normal. That's completely normal. So if you're out there thinking, I want to go this direction or that direction, that's normal. Where I think the real gold is, and where I think the best in the world are built, is being able to play in both those spheres. Being able to have the long-term macro conviction where they can suffer drawdown, but also being good enough in the pocket with the short-term strategies, options, etc., all the different sophisticated strategies where they can protect their capital so that they can continue to play even when they suffer those big drawdowns on some of their long-term conviction bets. So that's the area that I'm going to be focusing on, playing in both those worlds. So I hope that over time, if you're one or the other, that you can still get some value from this podcast, because sometimes I'm going to touch on the long-term stuff and sometimes I'm going to touch on the short-term trader type stuff. So, there's going to be something in it for everyone, because I think mixing those two worlds is the best way to really get the outsized, excessive, massive returns in this industry. So they're my thoughts. I've covered a lot. Again, I hope it wasn't too meaty. A reminder to throw these concepts into ChatGPT, throw the whole transcript into ChatGPT. I'm actually going to do that. I've never thrown one of my own transcripts into ChatGPT. So after this, I'm going to throw my own transcript into ChatGPT, and I'm going to ask ChatGPT, is this guy just talking a whole load of rubbish? I'm not going to tell ChatGPT it's me, because if I do, he'll probably be much nicer. He, she. I call it Lex, so let's just say he. I'm going to say, does this guy kind of somewhat know what he's talking about? Or what can I gather from this 30-minute podcast? What can I take away from this if I'm just getting started on my journey? And I'll get ChatGPT to critique this effort, and I'll see where I can learn from that. Anyway, that's it. That's enough from me. This episode's run a little bit long. Tell me what you liked. Tell me what you hated. Leave me a comment, and if you're getting any value at all from it, hit that subscribe button, hit that like button. That's how I know I'm getting a good job, and that's how the algorithm knows to show it to other people. So enjoy your week in macro, and I will see you next time for another episode of Money, Markets, and Mayhem.